the world wants one open, permissionless, and open source protocol for transactions. It wants one for money. In theory, the monetary layer is a winner take all. We're going to collapse to that. That's Bitcoin. Could you have a competitor to Lightning? Yeah, in theory, right? You can create a competitor to Lightning. The thing that makes Lightning ethical is that it runs on the Bitcoin token, right? If you run a crypto asset with a different token, it's probably a security, which makes it not ethical. So I think that you can create other open source protocols. Linux is an open source protocol, right? Lots of them.
Sure.
And then moving to the last issue, I don't think the world wants currency. So understand that money is composed of property and currency in the current environment. The currency is high velocity money and the property is low velocity money. And the reason that currencies will continue to exist, like the US dollar and the euro and the yen, is because nation states will continue to exist. So until the European Union crashes and the Japanese government crashes and the US government is gone, there will be a currency that's mandated as a medium of exchange by that nation state. So if you look out over the next 30 years, I'm not forecasting the fall of all nation states. I think that there'll be CNY, USD, Euro. I think there'll be shuffling of balance of power. I think that the killer app is a mobile wallet sitting on a phone delivered by Apple or Google or someone, ideally Apple. Apple creates a mobile wallet, builds in a secure element that's like a hardware wallet, as an authentication device, implements multi-factor authentication, gives you the ability to hold digital euros, digital yen, digital pesos, digital dollars, and allows you to hold digital property like Bitcoin.
Sure.
And everybody on Earth wants it. And as long as we have culture and nation states, you're going to have all those things. And the trend over the next 30 years is that the strongest digital property, a la Bitcoin, is going to eat into $500 trillion worth of property. Gold, precious metals, real estate, bonds, equity indexes, collectibles, however you store your money for the rest of your life. And then the strongest digital currency is going to eat into the economic value of the other currencies. Right now, there's probably $200 trillion stored in currencies, currency derivatives and the like. And the war is between the USD and the CNY with one Western faction, one Eastern faction. And then the business opportunity is companies that can deliver a digital currency in a compliant fashion, like your firm, like Circle, and then companies that can help deliver and manage digital property in a compliant fashion. And then there'll be, all sorts of variations on that, country by country, in every different industry. And I think those two trends are the trends of our lifetime, and they're going to continue.
Yeah, I buy that at a high level for sure. I think one of the things that's been an interesting question for me, even since I founded Circle 9 years ago, is, does the world return to essentially, commodity-backed, fiat-pegged currency models versus entirely government debt money?
You mean, will a country decide to back their currency with a gold or a Bitcoin? Is that what you mean? Or some other commodity?
Yeah, yes. So a mixture of things. So I think one is, I think one of the technical things that becomes possible with crypto is, the ability to kind of have synthetic expressions of cryptographic value. You could have a synthetic currency that is composed of an allocation of Bitcoin and an allocation of government debt money, and an attempt to have a ratio of that, not unlike the gold standard as it existed in the post-World War II era, and certainly in prior eras in different parts of the world. But that kind of power law curve, and that kind of as you noted, right, there's this ultimate kind of crowding out effect of especially in a digitized currency world that takes place because of the extraordinary network effects that come from digitization. But do those come together in a sense? Does digital property in the form of Bitcoin and digital currency in the form of the predominant government debt monies, does the world ultimately decide, you know what, we want to have something on the fiat side that is more sound, not just based on government debt and liability, but actually, is built on a building up of reserves and even treaties that exist amongst some group of nations around ratios of reserves or things like that, that gradually returns the world towards a more sound money basis, but acknowledges the fact that you still have people who live in nations, and there's treasuries and there's taxes and there's all this good stuff.
Well, I think the constructive way to think about this is the digital economy has 6 layers. The base layer, the layer 1, is Bitcoin. It's the property layer, the monetary foundation. The layer 2 is Lightning, an open transaction protocol or a competitor to it. Layer 3 is an application like Cash App or PayPal that moves it around. Layer 4 is a derivative. MicroStrategy is a Bitcoin derivative, right? Any company, GBTC is a Bitcoin derivative, Bito is a Bitcoin derivative, but any company that issues a security backed by Bitcoin has created a derivative. Another form of derivative is any country that issues a currency that is backed by Bitcoin also becomes a Bitcoin derivative. Currency is just like the stock of a country.
Sure.
And then layer 5 is Bitcoin products like Open Dime, or when you embed some asset into the hardware device. And layer 6 is a service like insurance or any kind of other offering that has Bitcoin or some of that embedded in it, a digital asset. So if we come back to your question, which is, will countries do it? Well, the countries were on a gold standard till 1914, then everybody gets off the gold standard. And the Treaty of Genoa in 22, I guess, is a gold reserve standard.
Right.
And then we eventually have at Bretton Woods another gold reserve standard, but we were never 1-to-1 backed. We had a small ratio of gold, and maybe the ratio was 100% in 1914, and maybe it was 40 or 30% at Bretton Woods, or 20%, and it was probably 5% by 1971 when we threw it all away. So I think that if we look at this, it's really a question of how solid is the economy of the country.